Alright, if we get started here, we're on the 2nd of July. That's a Sunday. It is still a little while to go. A good practice, especially on Mondays, is to always start marking up that new week opening gap. That's part of the routine for the Monday. And yeah, if you don't practice, I mean, practicing is the most important thing, really. Your own execution is the key, or execution in general is the key to consistency. And for consistent results, you need consistent execution, flawless execution, really. Which is not the easiest thing to accomplish, but the more often you practice, the easier it becomes. So, right here, we have the new day opening gap. We're still inside the Asian session, so let's let that play through and go roughly to 1 a.m. That's where or let's do 1:30 because that's roughly where I would get to the charts. Nah, come on, and I'm screwing it up already. Go back. I just pressed the play button for a second, but I don't like how it keeps on plotting the candles, so I'm looking away from my chart right now until okay, it reloaded, so I'm safely can look back. So, like said, I want to create a unique approach that I can, repeat every day on a daily basis. So for Monday, of course, there would be that little addition where you have to draw in that new week opening gap. Then the next thing to do is, depending on what type of move we had on Friday or the previous day in general, you'd like to look at, okay, where did we have the previous day's high or previous day's low if we would be in a downtrending market. The previous day's high, I'm usually going to extend that out to 5:30 because I'm not interested in anything later than that. Going to label this as buy side. Yeah, and I'm trying to use that same approach throughout all the days and then see where we go. And earlier at the stream or earlier in this recording, I said that I want to figure out if I want to use or how far I want to look to the left to look for fair value gaps, or if I just want to pretty much use fair value gaps that are created, let's say around 150, so inside of that last macro prior to the London kill zone. But if it's something as obvious as this one, I mean, come on. Super bearish fair value gap after pretty much pumping the entire PM session into buy side, buy side, buy side. I'm not looking further to the left. And the thing I want to create is to pretty much not having to use a higher time frame at all. So I'm just sticking to the 500 time frame here. We continue to go up. We had this retracement back into the range. We're now inside of this bearish fair value gap. And then I'd also like to draw up sell side. Sell side would be right here. That's 5 a.m. Let's extend that new week opening gap over to this level. Sell side is just below this level. We'd have the Asian session low inside the new week opening gap, and note what we have here. We have 4 equal lows. All right. Sell side right there. Some Asian session high buy side right up here. That's the current high of the day. I would be labeling that. Don't want to use too many buy and sell side labels, so I'd look for the high and low of the Asian range, or pretty much since we open up at 6 p.m. New York local time every day on a new daily candle. What I'm also going to be using is a anchored VWAP right at the open of that new day to see, okay, where's that volume weighted average price. And the last thing that's important for the London session is the reference point of that New York midnight level. That New York midnight level would be right here. And now we pretty much have everything set up ready to go. I sort of want to look for fair value gaps that kept holding support here. So I'm going to be using this one right here. Also extend it out because this one already kept holding support. Then we have this one just below it in case we go lower. And the lowest one before we continue into more sell side. And right now I'm going to do that testing if it's actually helpful to use these off that previous day, or if I could just do the same thing by only looking at fair value gaps that have been created at after 2 a.m. New York local time, London session kill zone. Alright, I think now we should be pretty good to go for this London session. So let's see, we zoom in here. I also like to use a VWAP right here at that midnight open. Midnight open was a doji, so we see we're sort of bouncing off this daily open VWAP in between the midnight open VWAP. We're below midnight. We're inside this bearish fair value gap. And let's see how we continue from here, or if we have any important fair value gaps we could be referencing on here pretty much within that new day. So if we look at this one hasn't been respected very well. Nope, so I'm not going to be drawing it in. We have a big one right here, but that's nothing I want to cover. This one has been respected pretty well so far right here. But now let's just use the big ones that could deliver into sell side that already kept holding support. Everything inside here. I mean, Asia has been a consolidation. I do not want to have too many boxes on my chart. That's the main point, really. Alright, so let's see. This 145, 150, 155, and it's 2 a.m. And as we can see, immediately we came back up, cleared a short-term high right up here prior to the opening of that kill zone. So really, I do not see much reason to, like, I don't know, get in, for example, on this bearish fair value gap. We didn't see that market structure shift yet, and it's also 155. So the main objective between 2 and 3 a.m. is to be patient and not trying to, like, I think I've did that on Wednesday during the London session, where I only have a $250 allowance during the entire London session on my 50k accounts. So really what I want to focus on is not trying to spend too much of my allowance during that first hour, because it's just the first hour. If I spend it all during that first hour, I can't even trade the second or third hour. And really, my ideal setups usually print between 3 and 4 a.m. And if they don't print within this little time window, and it consolidates between 3 and 4 a.m., I might see it at 5. Alright, so let's see. We cleared a short-term high. We still have plenty of buy side above. Look what we just did here. We left behind equal lows inside that new week opening gap. Let's see that next candle. I'd expect it to continue lower, really. Nope, we bounced off it. And now that's rather interesting. Look what we leave behind. We always need 3 candles to frame a potential trade idea. And really that trade idea would be right now if we can't take the sell side. So obviously I would enter a short position. What we could do is use a quarterly range of this fair value gap and maybe enter right at the 50%. But that all depends on your risk management. Usually I do a stop loss of 5 handles max during the London kill zone. So also a target of 5 handles, which would pretty much be very far away for a 2 to 3 a.m. setup. So yeah, I'd prefer to get my entry at the 50% level. I put it 1 tick below that to make sure I get filled in. My stop loss I would put at 2.5 handles, and I would slowly enter into this position with a max position size of 2 contracts. So let's see. We wouldn't have been tapped in. We opened up with a bullish volume imbalance, but we closed it in. So really what we could be doing here is at our first contract right here on the low of the fair value gap, and a second contract if we retrace higher into it. Let's see. Let's leave behind another equal low. Come back. Alright, this is rather interesting. So we would be filled with both our contracts. Right now we can see that the VWAPs now intersecting right here. And note how we close with this candle. This candle is theoretically still inside of this bearish fair value gap. It didn't close above it. We do not have another bearish fair value gap right here. We already used that one. So really, we would really have to wait for that next candle to see if we, either get stopped out or if we actually reverse from here without taking sell side at all. Damn it. Sorry about that. Well, it's just me anyway, but still, I don't like that. Sometimes I press the wrong button and then I already see what's going to happen, so that's not ideal. Okay, note, we would be in this short idea. I'm just getting rid of this position tool. But once we close above this bearish fair value gap, there's really no reason for me to believe that we'll still continue lower. So right here, I would take my close and I would scratch the initial short idea because we didn't deliver as precisely as I expected it to deliver. Let's say it like that. And once this candle closed above, note what we also left behind. With this time within the kill zone, a new bullish fair value gap. So really what I'm looking at now is a inversion fair value gap right here from the 2 a.m. candle paired with a bullish fair value gap right here. It is 2:55, so that next candle is going to be the London opening candle. And yeah, really what I would expect with the level of precision that ES has to offer is this bullish fair value gap to hold support. If it doesn't hold support and we manage to close below, I could frame the short, but as long as we hold support, I'm happy with the long. Remember, here we took a small loss, so we roughly end at our first contract right here, so that would be a 1.5 handle stop out, depending on where you entered inside of this bearish fair value gap. So let's see, London open, we keep on holding support. Note that we close back above the VWAPs and also above this inversion fair value gap, which is nice to see. So, of course, buy side would be resting above this short-term high. Above this high, also above this high, so we could be drawing in all these levels just to make sure. Because yeah, realistically, if we would be in a live trade, we would also look at all these potential buy-side levels and see if we can flip this into a inversion fair value gap. But right now, I wouldn't, especially on my 50k accounts, I wouldn't add more than one contract in here. Safety stop loss would certainly go below the slow. Alright, so we close back above it. We keep on consolidating. Let's see. Next candle, still holding that inversion. Okay, now we keep on holding above that VWAP, above these two VWAPs. We keep on pushing higher, so now we have a new highest close for the London kill zone. So we started the kill zone right here. That's the highest close for the kill zone. Just following along price action. We touched that midnight level and rejected from it. Okay, that's interesting. So right now, really, I would put my stop loss just below the slow, because if we reject from this midnight level with a paired bearish fair value gap paired with it, right here, we rejected from that previously. And remember, we're still inside this bearish fair value gap, which has been filled into the tick so far. Let's see. Alright, scary Mary, but still we didn't clear this short-term low. And we keep on closing to the upside, so all good. Let's see if we can continue to the upside. We just keep on consolidating. Let's see, we open up with a bearish volume imbalance, but we close it in. New highest closing candle, no wick to the upside. So let's see if we can breach through this bearish fair value gap and also above that midnight level. Once again, we tap the midnight level and reject from here. Okay, one more candle. Okay, so now this time new highest closing candle, of course, and we close right at this midnight. So see how much resistance that midnight has to offer actually. And now finally we get that relief. We close above midnight. We clear our first short-term high, so we took that buy side. We're not up 5 handles just yet. Remember, we entered right here prior to the London Open inside of this bullish fair value gap. Stop loss really one tick below these equal lows. We could also see a stop hunt, so even if you go for a 2.5 handle stop to maybe cover for a potential stop hunt, we'd still be fine. Like always, I would target 5 handles during the London session or London kill zone, and if I hit that, I'm done. Let's see. So now this bearish fair value gap has been flipped into an inversion fair value gap. Can it hold support? Yep, it did. We also just hit our 5 handle take profit target. Not enough time for me to close it because with TradingView, unfortunately, I can't use limits. But let's see if we can continue higher from here. Note we opened up with a bullish volume imbalance and it also remained opened. So I'm going to be drawing this one in. We are also now, if we look at our session timing right here, inside of the 4 to 5 a.m. hour, pretty much consolidated at the beginning, and then at 40, right here, 340, we started to deliver to the upside. Let's see, bullish volume imbalance, we do close it in with that next candle at 420. Continue lower, but now I would expect this midnight to hold support paired with the inversion. Now we have that first retest of that midnight level after closing above it. So let's see, we have this potential volume imbalance that could act as resistance. So if we want to see higher prices, rather in the short-term future, I would like to see a close above that to confirm the idea. And that's exactly what we do on that next candle. We cleared the SPY side. Note how we left behind equal highs right here. Let's see if we can't flip this bearish fair value gap. We closed right at the high. We cleared buy side one more time. Now I can safely exit my position, but let's keep on trailing it. 5 handles has already been hit. Let's see if we can close above it. Note that we left behind a new little discount right here. That's our fair value gap right here inside of the not inversion fair value gap yet. And yeah, really what I would like to see is the expansion to the previous day's high buy side. Next candle touches the high of that new bullish discount. We start on consolidating. It's 450. So really at this point in time, I'd like to be out of my positions. We open up with a new bearish volume imbalance, retesting this area where we would expect support. Let's see, we left it open and it's also an unfilled gap. It is 455, so really that would be a confirmation to get out of this trade with your second contract if you're still in my opinion. Let's see what happens. We do not even retest it. It is now the new hourly candle, so it would be time to flatten our position. And yeah, really, this entire trade idea wasn't based on some higher time frame analysis that I did, or some daily bias, whatever. It's just a 5-minute London session scalp. Looking for 5 handles. I know we have all these equal lows below, but essentially we would have cleared them. But before we clear them, we would have seen, yeah, I don't know, pretty much this 225 candle would have given you that first indication. So we were in that short. Let's, like I said, we framed it. Let's say around to 50% or maybe even at the low. But you can already see, let's say we use a 2.5 handle stop as a safety measurement at that midnight level. And we would also target 5 handles. We would have to drop pretty significantly through a lot of potential resistance. I mean, yeah, we have a gap here, realistic, that we could clear the sell side. But we're in this trade, and yeah, prior to getting into this trade, we already have our game plan ready. The game plan would be, we look for the continuation of this bearish fair value gap, not this upper one. We already used that to deliver to these equal lows. We look for this one to deliver lower. So where's our invalidation level? Hang on, let me get rid of that line. Our invalidation comes with the first candle close above this bearish fair value gap. And we got that right here at 230. And this candle closing right at the high of it is already a slight indication that this short might not play out. So what I would do right here is, if I'm in already with 2 contracts, I close one. I take an early exit because we could just continue to rally and get stopped out. And cutting risk, keeping your losses small and your winners big, is the best practice for you to become profitable, really. And especially with this gap to the upside after closing right here, immediately once I would have seen that gap, I would have exited with that second contract because that's not bullish order flow. So, and then once this candle closed, we also get the confirmation that we can scratch this idea of the short. Yes, we took some losses, but that's all right. And note, once we, pretty much trade our third candle, what do we leave behind? A bullish fair value gap. We keep on filling that, and we do the same thing over and over. The only thing that you have to watch, because now we're getting very close to that London Open, is we have equal lows below, so that's potential sell side. So once we close below this bullish fair value gap here, paired with the inversion, we would get out of the trade. But of course, because London Open has some sort of volatility to it, we could easily, could have seen a wick like this, right at the London Open, taking out all that sell side and then reversing. Typical for London, or at least for New York, but we didn't see it. So that's why you should always put a safety stop loss in place. You could put that at 5 handles. And once we see it close below on the 5-minute time frame where we got the fair value gap from, we would close the trade. So really, my risk parameters would have been a 1.5 handle stop loss, because if we clear the sell side, I do not want to be in this trade. I mean, like I said, we could get this wick and still close inside of this fair value gap. So just as always, wicks to the damage and bodies tell the story. Here, the bodies tell the story. Beautifully kept holding these discounts, paired with the inversion fair value gap. Never closed below it. Continued higher. It took some time. It consolidated for a while. Kept holding resistance at that midnight. But once we closed above it, we immediately continued higher. We tapped back into it to retest it one more time to eventually deliver into that Asian session high. Without clearing the Asian session low, we just ticked at it. So really would have been conflicting bias, because I could believe that many traders would have liked to see these lows to be taken, especially because we have so many of them. Also on higher time frames, those would be 2 perfect equal lows. But we could get to that later on, maybe now during the rollover period between 5 and 8, or during the New York Hill Zone. But I'm not interested in that. I like to trade the London session because it's very predictable in its movement, and it's not as volatile as a New York session. I mean, here we just had that New York Open. We purged that sell side. Look at all these wicks, and I don't know. I prefer the London session, and that's really what I'm looking forward to trade in the future. Alright, so let's see. We stopped the replay, and let's do another day of tapering practice.